Hello and welcome to Livewire Markets. I'm Keith Ford, and as part of our reporting season C-suite interview series, I'm joined today by HUB24 CEO Andrew Alcock. Andrew, welcome.
Thanks, Keith. Good to be here.
It's great to have you here. Now, HUB24 released its full year results today. You had excellent growth across a number of metrics year on year. What, in your opinion, are the most important numbers to come out of today's results?
I might come back to the numbers. From my point of view, it's about what we're doing. It's the fact that we're helping Australians secure their future in combination with advisors and other people in the value chain in wealth management in Australia. So we're really excited about the fact that we're hitting the spot, we're growing at record levels, but we're doing something right. And I think that's what this nation needs, which is to help people retire comfortably, to build and accumulate wealth. And that's showing through in our results. So to the numbers, the $18.9 billion of net inflows, that's really a record for us and the industry. It's a great result. It's testament to what's happening. You've got the dividend up to 42 cents for the second half dividend, which is up 31%. These are strong indicators that we're doing something right. And I come back to the purpose again. It really is about helping people secure their financial future, really designing a business around a sustainable model that helps customers. Coming through the results is very pleasing for us.
Obviously, the numbers growing shows that you are doing what you have aimed to do in helping people with their financial futures. Is there a number there from the results that you are particularly proud of that kind of typifies what you've been doing?
Look, apart from the 18.9, I'd have to love the NPS scores, and that's in our pack. You've got multiple wins of NPS, but to be accoladed in this industry and to win NPS across 4 different surveys, to me, you can be very proud of, because it means you're hitting the mark. Your team are on the boil and doing the right thing. That, to me, is the most pride-filling figure in there, the actual customer satisfaction stats.
Obviously, never always just rosy skies and things like that. So what are the areas of improvement for HUB24 over, say, the next half or full year?
I think what we're focused on is what our industry should be focused on, is how do you reduce friction in the advice process? How do you make it easier for people to get help? We talk about that, very topical at the moment. Who can afford advice? Who can't afford advice? How do we get access to it? I think when you look at our system, superannuation's 34 years old, and there are more and more people retiring now with larger and larger sums of money than we envisaged before superannuation. We've built a great accumulation system. We really need to improve access to advice and retirement solutions. So I think that's what the industry has to work together on, and so do we. We want to reduce friction, make it easier for customers to see advisors, to have their data in one place, to make decisions, to have advice delivered and then implemented on the platform. If we can get that right, we can get more customers getting access to advice, more people taking control and engaging with their superannuation and their future. I think that's the focus on us from an improvement point of view, to improve that process end to end.
Yeah, there's a chart actually in the investor pack that was released today that has kind of the addressable market and all of the funds out there. And they're a staggering amount of money. Obviously, we know that the super system's about $4.5 trillion, and it's got the platform market at around 1.3 trillion, I think. And then there's another bubble around it that is everything else excluding homes. And it's also another big number. It's over $4 trillion. I would imagine you would be wanting to get some of that money into the platform system, which means it is being invested, it is being looked after by financial advisors.
I think that, and quite often people saw the platform market as what's on platform, as opposed to the wealth and the need that's out there in the market and those 2 other bubbles on the chart. Absolutely, we're focused on building technology and systems that deal to a bigger addressable market, that make it easier for people to trade equities, buy ETFs, buy alternatives, MIS schemes here and globally, and to have data and interfaces that makes that much smoother so you can have it in one spot. So absolutely, for our shareholders, for our customers, we want to extend our technology into those realms over time. You see that with high net wealth and ultra high net wealth customers choosing to use platforms. The value proposition of a platform has shifted from being a supermarket where you buy some managed funds and equities to being the investment back office for a whole lot of other business models in Australia, fund managers, family offices and so forth. We're certainly focused on building the investment universe out and the capability to share data and do great reporting to address those markets.
Now, Andrew, another area that flows into the reducing friction, helping people with their retirement income streams is innovation that you guys have put out this last year is the Lifetime Super solution. Can you walk us through that a little bit and why you were going down that route?
I think it's an extra opportunity or extra feature in our platform with a couple of other retirement solutions. seriously, people are thinking about sequencing risk and longevity risk, and will they run out of money in retirement? We built a great system, but access to these products has been limited in Australia. This particular product, built with TAL, allows you to secure guaranteed income for life, if you like. And to do that in a way that gets you concessional Centrelink or means testing in the future when you move into retirement phase. So you enter in lifetime super, you elect to be in that particular product, and a portion of your portfolio can be put towards giving you income until you depart the planet, so to speak. So it really is dealing with that longevity risk and giving people comfort that they can do that. In addition to or separate to advisors running very, very valid investment strategies that give you income generation and capital preservation, it's a tool to add to the mix to help people balance out those needs and those risks.
Now, back onto some of the results numbers, you mentioned as one of the headline numbers, 18.9 billion in net inflows on the platform, up 20% over FY25, which is a great number. The second half net flows, however, were lower than the first half. Would you be able to talk us through what you believe has caused that slowdown and whether that's going to continue into the next half or full year, or whether that's going to pick back up?
Thank you so much for pointing that out. I very much appreciate it. Hey, look, the first half of 26 was really a blinder. It was a really, really strong half. We didn't expect it, and I think we had $10.7 billion, I think, in the first half. And you get cycles like that where you have the right conditions, where consumer sentiment is there, the settings and the policy settings are right, and advisors are able to work. I think in the second half you have Christmas, New Year, you have holidays, but you also went into a situation where there was global uncertainty in the world. There was the Iran war, oil prices, cost of living, leading into budget changes. All of those things make it difficult for people to decide how to invest and when to invest. It's a timing difference. So we've had a great second half. Our flows continued or increased as the half went on in terms of superannuation and people putting money into super pre the end of the tax year. So we still think we had great results. The first half was stellar. The second half was an awesome result. But you do get differences with economic cycles. Those things turn around. You'll see that come back at some point in time, and hopefully that will be soon.
A few other areas of growth for HUB24. Market share is at about 9.9% by funds under administration. More advisors are on the platform. That's up about 11% year on year. The funds under administration per advisor at about $25 million a year, so that's up as well. So they're all great results. How are you targeting continuing that growth over the next 6, 12 months or maybe even longer?
Look, we're certainly not happy to be at 9.9% market share. Having said that, it's gone up from 5.1 in 4 years, so it's almost doubled in 4 years. But there's no reason why we can't be in the high teens and even higher if we continue to stay on the boil with our proposition. And so we intend to keep leading and disrupting. The way we do that is we build a range of solutions for all life stages and all different client demographics, from those who are starting out with a simple superannuation solution to ultra high net wealth solutions that we talked about earlier, even for HUB24 Private Invest. So we can resonate across all sectors of the marketplace and help advisors go on a journey with their clients. It keeps us present of mind. It keeps clients and advisors growing on the platform. It means we have a broader reach. That's part of our focus there, but our excellent service and our innovation as well is driving towards that. So we focus on that. We certainly work with current advisors to increase the average or the share of their customer book. That's going up year on year. And in our pack, there's a chart there that talks about how we add new advisors every year. So it's about continuing to deliver faithfully to your current clients and increasing the share of their portfolio that they choose to trust you with, because you cater for all their client life stages, but also to add new advisors as well. So we'll keep doing that. It's a tried strategy for us, but we're certainly aiming to do far better than the 9.9% moving forward.
Now, Andrew, I do also want to ask you about the SaaSpocalypse that took place earlier in the year. Every software firm was hit with that, HUB24 no exception. It has kind of slid off a bit, but obviously the fears around disruption for software firms from AI is something that a lot of investors are concerned about. So what's HUB24 doing in the AI tech space that can kind of provide a bit of a buffer against that kind of disruption?
AI enabling technologies are great disruptors, and we're certainly riding that wave and employing them in our business. We are a regulated financial services business, so our business is not just software. Part of our business is Class and now Infinity, a software business, but the regulated platform with payment system connections, regulation, statutory capital are very different. So if you like, there's a moat there already, but we're certainly using AI to increase efficiency, and you see that in our results with increasing profit margins come out to deliver a better value proposition for advisors and customers, and even building AI-based tools like an advice review tool, and some of the data tools we have in market that we earn some revenue from already are AI-led tools, which we've been doing for many years now. So I think that the SaaSpocalypse, if you try saying that fast, I'll get it wrong, but people are starting to see through that. It's not the end of the world, it's how you leverage those skills. We have a track record of being a technology leader, even though I said we're a financial services provider. So we're going to do both, and we're going to leverage that in a way. So building better propositions and putting barriers around our business by being a tech leader is certainly the approach we've had in the past, and we'll do that with these tools as well.
Awesome. Well, congratulations on the result, and appreciate you coming in and joining us for the video today.
Thank you, Keith.
And thank you to everyone for watching along. Hopefully you enjoyed the discussion. You can find more from our C-suite interviews on YouTube.